Hey guys, Stock Saturday, and it's a green week slightly for me, about 2%, 3,000 up, sort of few changes here and there, but nothing sort of too drastic. I did my tax loss harvesting for the end of the tax year. Had a little bit to do and hadn't really used up my allowance at all. Not sort of year hasn't really gone the way I was expecting to, so I haven't sold all that much, and sort of obviously 12,000 nearly in capital gains tax allowance to use. Next year it starts to go down. So I sold Shell, Vanguard, emerging markets, and Volkswagen, which was down. And I bought, I sold the iShares emerging markets and bought Vanguard emerging markets, which is almost exactly the same with the difference of Korea, but I'd be sort of planning in 30 days just to buy back into the iShares one. That just sort of crystallizes crystallizes that loss. Volkswagen I sold out of completely and bought Porsche, which is sort of the holding company, essentially the same. So that crystallizes that loss. And sold Shell entirely and bought BP, which isn't entirely the same. They have a bit of difference between those two. But I sort of thought in 30 days, I can't imagine they're going to diverge all that much, and then most likely just buy Shell back. And that was a sort of reasonable, that was up around about 100%. So just sort of crystallizes that, and move on, and then I can start from sort of break even when I buy it back. And then I did the rest on crypto, which I will get to in tomorrow's video. But yeah, that was sort of the changes for the week. There's no real sort of earnings for the week, so just a little bit of news. Again, not even all that much news, to be honest, but we have had sort of house price indexes in the US. That's January, so I guess that's just revisions, not really too important. UK sort of housing market does still seem to be taking a reasonable hit. I sort of mentioned before UK would take more of a hit because we tend to do 2-year fixed rates and 5-year fixed rates on mortgages, so then putting rates up sort of impacts the UK a lot quicker than the US. And you've seen mortgage lending was expected to be 2.4 billion and was less than a billion, so that's not very good. And net lending to individuals, sort of 3.7 billion last month, was expected to be the same, and it come down to 2.2 billion. So these estimates are a bit off. And then I think you've seen that as well in the pending home sales in the US was expected to be down. This looks incredibly volatile, I guess, 8.1% last month, and was expected to be negative, but it was positive 0.8%. So that's very volatile, but that was a beat. So US doing a little bit better than us. What else have you got? The jobless numbers in the US, sort of pretty much as expected. Then you've got UK GDP Q4, so this is ending at Christmas time. This is sort of not exactly super up to date, being in April as of today, but it was better than slightly better than expected. Again, I wonder if that's just a revision. And then the house price index, nationwide house price index for March, so it's the most up to date data. And 3.1% annually now, and 0.8% for the month down. Far worse than expectations on both. So he's certainly hitting the market. And then provisional CPI data for the EU, higher than expected. So expect them to carry on raising rates and sort of trying to talk the market down. and you did have the very, very important CP core PCE data. So this is what the US Fed tend to look at, even though it comes out a bit after the core CPI. This is their sort of favourite measure. So the February data was slightly lower than expected on monthly and annually, but probably not coming down as fast as they would like. So, yeah, that's the news. Not a huge amount of news. So, with not a lot of news, I thought I would come back and revisit my sort of target stock allocation spreadsheet, and sort of why it's changed from here, really. So this was sort of an idea that I had before of sort of where I would like to be going forwards. And then I also did a sort of doomsday one if we were to get a reasonable crash, which I don't think we've had. We've sort of gone down slightly, up and down. Tech stocks are still sort of outperforming at the moment. We may have already bottomed. If we have, then I might have missed out buying the bottom and won't have done too well. But yeah, as far as sort of a steady market portfolio, this was what I was expecting to be, maybe not in all of these, but as an idea. I'm largely sort of pretty much all out of the house builders at the moment. Not something that I wanted to hold. Again, with that sort of UK housing data not looking very good at all, and just sort of starting to get worse, really. So yeah, not in those. Pretty much in the REITs that I had, Vici and the Tritaxes, Stag, and that sort of thing. Industrial side, I had 3M on there, but that seems a bit of a horror show at the moment. Archer Daniels sort of rocketed up with the war, basically, and wheat prices. Volkswagen still hold through Porsche. Caterpillar and Deere sort of just seem a little bit expensive, and FedEx I wasn't really that interested in for now. Stellantis obviously being a very large position. Infrastructure and energy, yes, so I hold Shell, or will hold Shell probably in a month, but that's my only one in there. The other two sort of didn't really strike me as particularly good value at the moment. Louis Vuitton sits on there as the maybe, because it never comes down. Probably should just buy it one day, but that's a no. Food and drink, I have nothing, because these all seem rather too expensive to me. I know they're sort of, well, except Tyson maybe. But yeah, I know they're staples, but just not really good value for me. Financials I've kind of got out of entirely, sort of not really liking financials in general. You notice no sort of banks other than Nova Scotia, sort of Canadians, but yeah, not really into that sector at the moment. I kind of think it's too leveraged, too much risk, and everyone just thinks it's fine. Medical, I kind of got out of, something that I may sort of look to get back into longer term once I'm out of crypto, but not sort of something I wanted to focus on at the moment. Consumer staples, ditto, basically food and drink, too expensive for me. Mining, still hold all three of these, very happy with them. Probably would look to add a bit more if they stay down for a reasonable amount of time. Entertainment, not in at all. Sold out of ASOS, can't see me getting into that again. Probably delete that, actually. Hasbro and Disney, though, I do quite like the brands and may get into them later on. Defence, I'm all out of. They sort of rocketed up with the war, obviously, and I'm not expecting that to last all that long, so I didn't want to be in those. May get back into them sort of longer term, if the war stops and they come down. Tech, sold out of Intel because that just seemed horrendous. They're too far behind for me, but sort of progressing. CEO's doing well. Nintendo I sold out of. Would kind of like that to come, ideally, to come down, and then we have a switch to announcement, and yeah, I would get back in maybe. TSMC, I like, big position. Broadcom, sticking with that. And then eBay and Oracle, or Oracle I never actually bought into, but yeah, both of those sort of not too bad. And then Chinese tech, still very happy with. But Samsung and Sony I did get out of. But yeah, so I sort of said if we had a crash, it may look a little bit more like this. So yeah, it would be sort of more tech heavy, and I actually have bought into Meta and a little bit of Google, but not all that much else of the technology. Things like Nvidia just seem far too expensive for me, and Apple I've never really been that keen on. Similar with Microsoft, just a bit expensive. And then yeah, there's not too much change outside of this, other than maybe Take-Two and Games Workshop, one that would be sort of on the list for later on. And then yeah, Tesla I have owned before, but sold out of, and just don't think it's tremendously good value at the moment. And I have sort of mentioned ETF wise, I've kind of got almost all out of, aside from emerging markets, just sort of thinking that they're generally a lot stabler than individual stocks, and I do kind of think we're potentially around the bottom, if not sort of maybe dropping a little bit more, but then I would kind of want to be in individual stocks sort of coming out of the bear market, and sort of getting into ETFs when things are a little bit more stable, most likely with the crypto money, sort of barring maybe the thematic ones like video gaming and clean energy. I expect they could do well sort of in a sort of just after bottom environment, but yeah, things like sort of your S&Ps and your Europe mid cap, for example, I wouldn't see rising much more than individual stocks. So yeah, I kind of get out of those. I do hold a little bit of individual gold and silver miners. So yeah, not really looking into the ETFs of those at the moment. And on the sort of crash side, I obviously am actually shorting the Nasdaq at the moment, as opposed to sort of expecting that to be rocketing away. This were the sort of leverage 3x was long leverage, sort of thinking once we'd bottomed. So I'm not doing that at the moment, but I'm being certainly proven wrong while the Nasdaq's on the up. And then, yeah, Scottish Mortgage is an interesting one. I am sort of looking into it. And the iShares Robotics. Scottish Mortgage sort of, they do hold a lot of private companies and seem to be getting hit with that at the moment. And sort of people comparing it to the Woodford Fund, which had to sort of basically shut down because they had too many private companies and essentially had a bank run. But that can't really happen with Scottish Mortgage, as I understand, because it's an investment trust. So if people sell, then just the share price goes down. They can just leave their assets as they like. So yeah, potentially one to consider. The only thing I didn't like was Moderna is their sort of largest holding, and not really a company that I'm very keen on at all. But yeah, certainly one to maybe think about and sort of just trust their long sort of top quality record. Really, they have a great history. So yeah, one that I'm certainly considering. So yeah, not too much going on at the moment. ISA season opens up this coming week. I don't think I'll be sort of piling into it straight away. I'll probably wait again. I don't have 20,000 in cash sitting on the sidelines. If anything, it would probably just be transferring some money out of here into the ISA, maybe buying the same stocks, or possibly buying something different. Potentially selling something like Vanguard Emerging Markets even for something a little bit more risky in the ISA. But yeah, not too much going on there. The sort of ISA side, Sylvania Platinum still struggling a little bit with metals prices down. As I say, my short Nasdaq is going appallingly, but yeah, if crypto's on the up and Nasdaq's on the up, then I don't quite mind this little ETF being down, so that's fine. And yeah, the other two sort of aren't moving too much. Alibaba has had a reasonable week. It's practically gone green for me now. I think that's up sort of 15% or something for the week. They're looking to split up into 6 different companies. So a lot of people are sort of wondering what will happen to the stock. I don't hold the Baba. I actually hold the Hong Kong ones for both of these in Interactive Brokers. So in theory, I would be fine. I think the ISA will be fine as well. I think it'll just be 6 ADRs of the Hong Kong listings, sort of in the Trading212. But could be proven wrong. But yeah, I prefer holding the Hong Kong ones. So yeah, we'll see how they do. Whether people get really excited about buying sort of the AI arm or the shopping arm in particular. So yeah, see where that goes. And yeah, leave your thoughts in the comments below and like and subscribe. See you soon.